Shake my hand, everybody. Welcome to another video. All right, we're doing a short one asset at a time, long-term analysis. If you don't understand why I'm doing things this way, please check out the Euro USD video that dropped first in this long-term series. This is how I am starting, content production on trading. I'll be looking at 109 pairs. These are the pairs that I generally like to trade, the pairs that I'm generally in charge of on the trading floor, the pairs that are in my blood, the things that I've been trading for the last 5 years consistently. But I can't just jump in as I explained in the Euro USD video. I've been away over a period of 90 days of complete silence, no work, no trading. And so it's very difficult to just start and become an asset manager out of nowhere. I want to warm up with you by looking at these assets and trying to figure out what's changed in the last 3 to 4 months. What happened in the first financial quarter when I was away? Because we were on the money the whole of last year. We were on the money with the Fed, the policy, the structure, the micro, the macro, and institutional order flows and COT stuff. We were on the money with the sentiment. And so we want to first understand where the banks are in the month of April, preparing us right for some very good long-term swing and positional trades from the month of May, where our traders war room is going to begin. Just a kind reminder, I promise you these are short videos. I really don't want each video to go over 10 minutes. So without further ado, ladies and gentlemen, we're going to start off with pound USD. I think that's the asset we're doing right now, pound USD. Like I said, we looked at euro USD yesterday. So let's quickly have a look at the pound USD. So this is our final analysis on the euro, and I believe CPI has dropped. I'm out of touch with CPI. I'm making this recording on the 12th of April. I know CPI dropped today. I know the dollar tanked, but we spoke about the dollar falling tremendously last year, right? But I want to get ahead of myself. I want to judge each asset by itself, right? So just like the Euro USD video that I did, which I really recommend you start off with, I'm going to start from the very beginning. Remember, banks think in 3 months, have a take profit target of at least a year in continuous 10-year cycles, right? So I love Saxo, ICE, these two brokers for analysis always give historical information. The beauty about historical information is you can back test your trading strategy as far as 1970s, 1960s sometimes. I've been very blessed to find data up until the 1950s. And by the way, as much as I'm doing these short formatted videos for YouTube, right? Please note that I go back now. So the Euro USD and Pound USD, after I've done 5 assets for YouTube, I am going to then do long wave analysis on those 5 assets for strictly students only. And this information is going to be put on our learning site, where I'll be back testing every single supply, every single demand from the beginning of time to reassure us of an 80 to a 90% win rate, right? And teach you guys how to systematically back trade, back test. I apologize, right? So this is Pound USD on the 12-month time frame. That means one candlestick represents 1 year, right? And remember, I'm doing this on a free TradeView account. I'm not using a pro account right now, so you do have access to this information. Most retail traders just don't use it because they don't understand its relevance, right? So this chart goes all the way back to 2003. I'm actually not impressed with that. Saxo generally has charts that go 5 back. So I'm going to go to ICE. That's also generally a good source of, a broker information. Okay, so you can see I've already some old analysis I was doing last year, and it still stands. Beautiful, right? So you see this starts from 1971, right? So we're going to go with that because we really want to understand price. If you've ever done my module 1 in supply and demand trading, if you have first, go to my module 1, module 2, hit the link down below. But if you've done my module 1, you will know within the first 10 lectures of that module, I tell you off the gate, Pound USD is a sell profile asset. Here is the evidence. Look, we're looking at 1971. I know we do a complicated analysis in our trading course. Since 1971, price has never, ever successfully gotten back to its beginning levels, right? This has been a sell profile asset since if you're into economic history. Man, I'm feeling so pumped and excited to be doing this stuff I really, really love this stuff, right? So we've got a downward trend from 1971 all the way to the year 2023. We are doing long-term analysis as quickly as possible to understand where price is now, where price is coming from, and to accurately speculate as supply and demand traders where price is going. Because if we can speculate with high sense of probabilities, not like a prophet, not like a witch doctor, not like an inside trader, but using probabilities, high odds, with using supply and demand, we can take trades that very much will land in our favor, right? More profits than losses, right? So I've got a simple descending triangle pattern here for, spanning decades and decades. Once again, I am on the 12th month, which means one candlestick represents 1 year. Banks thinking 3 months, take profit in a 1 year span, in a 10-year cycle. This is very important, and I really, really hope you take use of this, TradeView update, which has been around for a while, where free TradeView accounts have this type of data. Seeing higher time frames is 50%, is half the battle. Like, it's literally the battle to success, right? So really, we can see that prices come down. We can see that the last time price came to the lowest major turning point, if you've done my course, you will know what a major turning point was all the way in 1985. And markets have pretty much arrived there, right? I don't want to get too technical. We just want to understand price, but just note that price has actually gone slightly lower on this end here, which means, as a positional trader, if we're sitting inside a bank right now, we would be talking about long-term pound USD sales, long term, right? But before we get there, we need supplies to be in control to drive price down. This is very important, right? So now that we understand the big picture, right? This is our 1 year or 12-month chart. I'm going to move to our presidential chart. Our presidential chart is a much more active chart. It's a 3-month chart. Each candlestick represents 3 months. So this is what we call our presidential chart within the 365 Trading Academy. I feel much more comfortable. Not that I wouldn't earlier on, but there just wasn't that type of clarity, right? It's such a big zone. Sometimes the order blocks are clear on the 12-month chart. Other times they are not, right? So I've drawn a zone here. I'd have to swallow all of this. And by the time we do a multiple time frame analysis or a breakdown in price, right, my zones will be too cluttered. So I'm happy to use the governor, the 3-month time frame, which tells us that we're not only in a demand, we're in a broken demand, a demand that has been broken, but that doesn't mean it is now time to sell. It does mean that the next time price comes back here, we would be wise to remember that the demand is broken and therefore there is no flow. All right, so we'll get into that another time. But I'm looking at the clock. Minus my little 1-minute introduction, I'm 6 minutes in, and I need to wrap this up within 10 minutes. Let me know, by the way, if you love this type of analysis, please hit the like, please subscribe. Let's let YouTube know that I am back. I promise you, I am really back. First, we'll do a series of these short videos. In May, we'll start the war rooms. We're going to run war rooms all the way till the 2nd week of December. I've had all the breaks I need this year. Right, I'm just hungry to get back into the game, man. And I think this is the best way for me to do that. At some point, we're going to catch up with the sentiment. All these things that you guys have been doing by yourselves, I'm absolutely proud of all 365 students. Again, if you haven't watched the Euro USD video, please do, because I do thank all of you who kept checking up on me, looking for me, who wished me happy birthday, who wished 365 a happy birthday, who thought maybe I'd fallen out of the earth. It is well. I truly honor all of you, and I thank you so much for the care. All right, I would never abandon ship, but I definitely needed a break. I definitely needed a break. And in my email to students, I do get into a bit of detail about how important that is and why it was necessary. Right, so we've got a governing a presidential demand, right, at play right now. It has been broken, right? The doors have opened, but just like Euro USD was back into the supplies that we enjoyed trading in 2020 during COVID, the supplies we enjoyed trading in 2021 right? After that, we're pretty much in control the whole of 2022 while Powell was doing his thing. So for me, when I'm looking at the presidential chart, you will not see me interested in swing trades, let alone positional trades of selling right now. Because to me, my chart is telling me it's time to buy. When the higher time frame is in control, there is nothing you can do, because it is the higher time frame that sets the trend that is apparently your friend. You must understand where the origins of these moves come from. Right, so I can see some breakup structures. I acknowledge that the supply was powerful, very, very much in control, and it broke a lot of structures. Eventually, it broke a demand, which means as a bearish trader, and I call myself that because I love to sell more than I love to buy, one day in life, great selling opportunity will come here. This will be the positional trades I want to hold for 1 year, 2 years on my trading floor, and maybe for a year in my personal trading account. This would be the investing. A lot of people don't understand you can invest in Forex. It just depends on the type of trader you are. As an intraday trader, you're just a trader. As a swing trader, you're just a trader. But when you become a positional trader, you use your pips, your leverage, and time in the market as a form of investment. Ray Dalio was one of the best. We had the biggest hedge fund management who recently retired. 60% of his capital gains were investments in Forex, right? Forex. Warren Buffett once held a Euro USD sell for over 12 years in Forex, right? They use these vehicles as vehicles of short-term investments, but very, very long-term gains, right? Time is moving, Leroy, time is moving, right? So right now, like I said, in the medium to long term for 2023, we are buying pound USD because it seems like there is an attack or weakness on the dollar, which might imply, without me going back to check sentiment, because I've been out of the game for a while, it might imply that the Fed has slowed down with the interest rates. It might imply that, CPI is dropped. It might imply that inflation is dropped. It might imply that there is no need for a strong dollar, and so these currencies are taking over. Right, on the weekly time frame, and after we do 10 assets, I'm going to teach you guys how to do sequence realignment, a specific table we use in senior traders, which I wanted to introduce, or we'll introduce in the module 3 stuff, but I'm going to bring it up briefly here because you need to understand the stuff. We've a demand towards the supply. Markets have arrived at a weekly supply, right? We know, and you as a trader understand these short-term, medium-term, long-term time frames and the type of decisions you need to make. When I look at this weekly supply, I am not inspired to sell. Excuse me. I'm not inspired to sell at all, right? This weekly supply to me has been overtapped. Number one. Number two, you can see that in terms of buying prices, there's been clean distribution in the form of a potential continuation pattern on the side of the buyers, right? And anyways, we know that the next governing supply is all the way up there. It means two things for me as a trader. Number one, I can't exactly buy in this zone, but I can't exactly sell in this zone. So I need to wait for proper alignment. When we talk about sequence realignment, it's really a trick for intraday traders, but I've found a way and I've back tested this for it to work more comfortably for me as well as a long-term trader. The sequence is off. And when I talk about sequence, it's the stuff we covered in module 1 when I'm looking at multiple time frame analysis, where you want nested zones in your covered zones, where you want a nested entry point in your higher time frame entry point, right? So I acknowledge this, and I am very sorry. By the way, this is not weekly, this is monthly. I do apologize. I got ahead of myself there. I'm noticing we were on the presidential chart 3 months. Now I'm on the monthly time frame on the governor. So right now we're inside a governing time frame. I apologize. My sentiment is still the same. I don't think it is time to sell. Even though it's a governing time frame, I think it's time to watch. We might get some sell pressure in the month of April, all right? That'll be interesting. And what would be nice to see is where price leaves us within that sell pressure, right? Please, again, give me some feedback on these short videos. I want to make them as short but as impactful as possible. Right, so I'll drop now to the weekly time frame because there's nothing more to say or see. Now we go to our mayoral time frame, the weekly time frame, and I'm going to start to tidy up the supply. I'm now making it tidy When I make it tidy on the weekly time frame, we can see an interesting pattern here. We've got two green candles going up at 365. We take note of these things. This is what we like to call our complicated 365 candles, or in many ways, simply a specific type of order block that allowed price to sit, and then we see a structure breaking. We see some type of imbalance leaving. We can debate whether we like it or not, but price did break structure. There was enough supply coming from here. Don't forget, it's a monthly supply. So if you go back a year ago in May 2022, all price did was just rip through as the dollar was strong last year. It just kept ripping through, and it ripped, as you can see for yourselves. Now markets have returned. Wait a minute, returned where, Leroy? Markets have returned to the area of reckoning. If you look at this entire cluster, this is pretty much the month of April into May, and right now we're in the month of April going into May, and we've returned at the control zone of April and May. I'll say it again, because if you're new to this channel, you have no idea how important this is. Markets, or specifically institution banks, thinking 3 months, thinking financial quarters, over looking at an annual take profit target in a 10-year plan. Price always comes back. What we now need to judge is it worth it? Well, we have rules at 365 for areas of value. Rule number one is how many times did price return to an area of value? And for me, if you've done my course, you will note that I don't want to touch this area. For me, I understand that as very much there's a high chance, there's a probability that the sell could work. But it is not a high probability trade for me. Why? We've got a weekly supply, yes, inside a monthly supply, very, very close to the 1-year demand. If you remember your supply demand curve, we talk about where price is, how low price is in the curve, how high price is in the curve. I recommend all 365 students who've done module 2 to go and draw a supply and demand curve on pound USD, and please do that on the monthly time frame to understand the big picture curve. And then remember our rules. If you're going to enter on the daily time frame, let's say you want to sell here on the daily time frame, you need a curve 1 time frame higher than your entry point. So you need a curve on the weekly time frame. Go draw those 2 curves and let me know in the comment section where you land, right? You'll notice that you're quite low on the curve, that we're in bullish territory, we're in buyer's territory. So coupled with the fact that the zone has been tapped way too many times for my liking, and that the price of the zone is also structured low in the curve, number 3, finally, that it is way too close to a very, very big demand, a 1-year monthly demand, this entire green zone. I am going to pass on any selling here personally. What I want to look out for now, as a future trade, I'm not here to give signals. I'm here to get a sense of the markets, right? If you're just here for signals, I'm happy, you'll make some money, but you're never going to get the type of education you need. And so one day when I decide to take a 6-month break, one day when I look at my little kids and I see, oh my God, you're too old. You're right. I've missed out a lot because I was recording every single weekend. I was teaching every single night, and I just want to catch up with you. I want to understand where you are in your life, and I disappear for 6 months. It is you going to be at a disadvantage. I say this for 2 years that, guys, at some point in time, I will, because my family is the most important thing to me in the world. I love what I do. I love trading. I literally have to master this for them. But I don't want to lose time. I want to balance my 365 family and my actual family. So it's very important that out of me, you drain me for skill and not signals, right? But if you're interested in a trade, I am interested to see what happens here, because one could argue a section here of equal highs, which to me is always a gathering of liquidity. It is always a gathering of liquidity. When markets are down with this area, as a patient swing buyer, I want to see what they're going to do in zones like this. That's what you see. This weekly demand that I've just drawn is positioned inside a governing demand, inside a presidential demand, inside a 12-month demand. This is a powerful place to be for a fresh demand. I don't know if the dollar can ever recover, whatever is going on out there, for price to come back this low. Significant areas of value, and we like to call them fresh. We like to say they are fresh for a very fundamental reason. So I will be looking at plays coming back down into this area so I can buy long term. Then I'm going to switch to the daily time frame, ladies and gentlemen. I understand that we've got zone upon zone. I'm going to delete the 12-month zone just so that it looks neat, right? There we go. That's gone. Now, remember, the green boxes you're looking at now are just weekly demands. Inside these weekly demands, I need to then start to come up with a solution about a daily entry, right? So now I'm on the daily chart, but I currently have a green weekly demands and one yellow weekly supply, but I'm on the daily chart, right? So I'm gonna investigate quite carefully what's going on here. If we go at Kini-Hashi, I'm pretty sure this whole area will turn into a peak supply, or there will be order blocks there to confirm the power of that supply. And there we go. There we go. Right. So complicated 365 candles, a counter trend was created, peak supply, clean imbalance, another peak supply within the monthly supply, within the weekly supply, big imbalance, break of structure, price continued, everyone is happy. If I was to draw horizontal lines to mark out proximal and distal lines using Kini-Hashi candlesticks, I would be forced to have my proximal line on the daily time frame right here, this white line, which is an entry point for a seller, and my stop loss. I'm just here to check out the vibes, fill out the markets that's currently out of alignment, right? Listen to me. The daily and the weekly areas of value on this chart are out of alignment with the big picture, which is to go up, right? So because of that, we generally like to anticipate these areas as retracement zones. For example, it would not be surprising to me that a little bit of selling takes place. Retail traders get stuck selling, and then price moves back up immediately when they jump in with their sells. Why? Because they got caught in a retracement zone, or they have poor supply and demand analysis. This move here in price is very parabolical. To me, it needs to be broken down. You need stuff that looks like this in the markets. This doesn't last forever, right? This little run here does not last forever. When I'm looking at my Kini-Hashi sentiments and I'm thinking about my order blocks, remember the green zone here represents a weekly demand. I start to locate nested zones inside. So I've got a daily demand one there inside my weekly demand, and potentially a V-shaped demand down here inside my weekly demand. And I'm not interested. There is one here, sure. No, let me not say I'm not interested. I'm happy to mark it out, but very soon I'll probably move on. Please note, most of the time, 50% of the time, I think it was like 45%, which is quite significant, of the zones I ignored last year, according to my trading journal. Zones I called cowboy. 45% of those zones played out. The ones I said I'm not going to touch them. They're too risky because I'm such a safe trader. But 45% of those trades I left alone made money. All right. And remember, you can't say, oh, Leroy, 45 is close to 50, it's a 50-50. Remember, for every winning trade I have, I generally try for a risk-reward ratio of 1:3. That means had I taken all those cowboy trades last year and only won 45% of them, I would still have had a winning rate of 100 and something percent when you counter 1:3 risk-reward ratio. So I say I'm going to leave them alone, which is really what I like to do according to my trading strategy. But I want you to remember that some of these plays work out, right? You don't have to be as conservative as me, but definitely don't be a crazy risk taker and ignore the fact that some of these zones are too hot, right? So we saw that this zone, according to Kini-Hashi, really worked out well, right? There was a clean imbalance, but when you come back to normal candlesticks, it doesn't really play. It doesn't really play to my tune of things. Price comes back in here, fantastic, goes out, and you will notice in my analysis yesterday, the Euro USD video that you should watch first. And if you go back to the charts, you'll notice that price is already retraced into the latest, freshest demand zone and a whole supply zone to be taken out. So I will be watching, in the corners. I don't like this. I don't like this, and I definitely don't like this area for now. What I would like, or what I would happily risk money on, is price returning to this particular demand zone, and I'll only take it at low risk under these circumstances. Price must first. This happens, sure. I'll come back, put a pending order, and take the trade. If it does not happen, then I'm just going to have to watch price and wait for a drop. Ideally, I'd love price to drop all the way down here, because if price comes all the way down here to these really good lower demands now that are nested within weekly demands, I know I am in a long-term good trade. If price doesn't do that, I am then forced to then pull out a fib and say, well, let's see the options, right? Let's see if this was anti-Fibonacci from there to there, right? So that's my swing high, swing low. I've taught on this many times on the channel. You're just gonna have to go find the videos, but there's a beautiful video titled Fibonacci. You really should actually take time to watch it, because I hardly fools, but I do rely on my Fibonacci. I really rely on my Fibonacci, right? So if I do something like this, right, and I pull out, I just want to make sure my Fibonacci is correctly drawn, right? So there's my swing low right there, right, all the way there at the bottom of there. And there's my price yesterday, and by yesterday, or at least this week, in the second week of April, presented itself in all demand. Our supply and demand rules work, created a new demand, and it's within that PCP that these are potential continuation pattern zones, right? So this PCP is gone, right? So somebody's definitely making money right now. I just don't like the risk, right? I never buy into this close to a supply. Where would be my take profit? I mean, price could stop anyway, blah, blah, blah. But if this was to be taken out, this is a good retest area, sure. If this, for whatever reason, gets taken out, you take the L and you look for lower demands. You can see our golden ratios are right here, nested within the weekly demand. Ladies and gentlemen, I am working so hard to keep these videos short. It went longer than anticipated, but I'll keep cutting them down until we can get them into 15 minutes. Thank you for watching. Thank you for liking. Thank you for subscribing. Thank you for hanging on. For those of you who are holding on, I hope you didn't wait in vain. I hope you didn't wait with your hands in your pockets. I hope you didn't wait for me like Moses. I am no one's savior. I am just a guy passionate about markets, and I really hope to equip you for the days ahead in your life, so that you are as independent as you can be. And then we come back together when there's that moment. I have so many exciting announcements. My mind is much more clear. I have a new branch, a whole trading floor, opening up in East London. There are a lot of exciting things to share, but I'll see you guys in the next video. 3, 6, 5, shake my hand, and cheers, guys. Until next time. Bye.